I'm bullish on Bitcoin, the concept. I'm bullish on the implementation thus far, but it has its growing pains like everything else. Currently, its major downside is governance.
Hello, everyone, and welcome into CrushTheStreet.com. I'm Kenneth Amaduri, and I got a special interview today. First-time guest on my show. His name's Reggie Middleton. He is an American entrepreneur and the founder of Veritaseum. And the finance and technology blog he runs, the Boom Bust blog, very popular. And one of the few that called the housing crash of 2008, Lehman Brothers, Bear Stearns, he was ahead of the curve. And we're going to talk to him today about what is going on now and what we can potentially expect in the future here. We're going to talk about Bitcoin as well. Reggie, thanks for coming on the show with me today.
Yeah, very welcome.
Well, sir, here, let's start off with some of the most recent news that's going on geopolitically, economically. We know that populism is on the rise. People voted for Trump, Brexit, and it looks like Marine Le Pen might be the president of France in the not too distant future. Is this a sign of the current global economic, financial environment? And what are some initial thoughts on this?
I actually believe it's more of a geopolitical cycle and not necessarily economic cycle. The winning of President Trump, and too early to cast a dice for Le Pen, from what I understand. I think she took a loss in the second round, but whether she wins or loses, her popularity, considering her far-right stance, is a sign of the times of the voting populace being rather tired of feeling that they've been left in the periphery from an economic boom. Of course, perception and reality often don't align. And just like many of the voters who voted for Trump, who felt like they were economically on the periphery, and they have to separate those voters from the voters who are the upper middle and the upper class who voted for Trump, because they feel that Trump would support their interests in terms of capital concentration. But those working and middle class voters that voted for Trump because they felt that he would bring more economic prosperity, I believe don't understand how the global economic cycle works. Basically, a lot of Trump's promises are going to be difficult, if not impossible, to pull off. And that's assuming he really intended to pull them off, and it wasn't political rhetoric. A lot of the lost jobs in those areas, the Rust Belt areas, the Midwest, a lot of the manufacturing and industrial areas have not been lost to trade deals in Mexico and China. They've been lost to robotization, automation, and technology, number one. And then secondly, they've been lost to the economic pool that's been made common, and that allows capital to flow as treated best. So China has a cheaper labor force than the U.S., even though it's less efficient. But even if you factor in that efficiency, or that lack of efficiency, it's still cheaper, which causes capital to flow to China. This is, the way the world is progressing. If you look at a lot of Trump's businesses, he buys his concrete from China, he gets his suits made in Mexico. So he's doing what all the other businesses are doing. Now, I can understand where a lot of workers and employees would not want that to be the case. But if you cut off the less expensive labor, you have an increase in aggregate pricing, which is going to, filter back into the economy and cause difficulty in affording and buying widgets, services, X, Y, Z. So long story short, it's probably too late for that with all the talk you have been doing. You really don't get a free lunch. So either capital goes to where labor is cheaper, you get lower prices, but you get a shift, in the labor force, or you attempt to hold capital hostage where you get higher prices and less efficiency. And sooner or later, that capital is going to leak out of the cracks into where it wants to be anyway. So hopefully did I fully answer your question with my rather lengthy diatribe?
Fair enough. Well, I guess as a follow-up to that, the Fed appears to want to start putting the screws on the loose monetary policy, and they've talked about unwinding their $4.5 trillion balance sheet. And I'm wondering, is there room for them to actually follow through on this based on the cycle that we're in right now?
Well, I don't see any room. You know, you have to understand, the Fed has learned that it has a decent amount of market influence simply by jawboning and talking. So it says X, Y, Z, but what it does is totally different. If you remember, they were supposed to be raising rates at 2011, 2012. 2017, they just started, and they raised a matter of basis points, despite the fact that they dropped it, you know, several hundred basis points in the other direction. Now, to put this in a perspective, in 2009, the first quarter of 2009, the Fed had exactly zero mortgage-backed securities on their balance sheet. None. They never bought mortgage-backed securities. They dealt basically in treasury and very liquid, high-grade, marketable security. Last quarter, the Fed had $1.8 trillion worth of mortgage-backed securities on their balance sheet. That's a big jump. From zero to 1.8 trillion. 1.8 trillion is larger than the vast majority of developed nations in this world in terms of GDP. And to put it in another perspective, there's only about, I think, $8 trillion worth of mortgage-backed security circulating in the U.S. And the Fed has over 1/5 of them on their balance sheet. The Fed has allegedly stopped QE and it's allegedly started raising rates, but that's allegedly. In reality, they're still doing QE and still compressing rates because they're buying between $10 and $20 billion worth of mortgage-backed securities a month, still, every month. Now, the reason they're doing it is as these mortgage-backed securities in their portfolio mature, they turn into cash. But instead of the Fed retaining it in cash or putting it in treasuries, they're using it to buy more mortgage-backed securities. $10 to $20 billion a month is still enough to severely distort the market, primarily because the Fed is the only significant buyer in town. Now, you take that, if they stop putting that $10 to $20 billion a month into the market, interest rates are going to go up. As interest rates go up, demand for real estate is going to go down, and then prices will go down. And that's not even including the fact that they still have $1.8 trillion of principal to unwind. Once they start doing that, expect a lot of the coastal cities and the concentrated metropolitan areas that have extremely high rates of rental pricing increases to drop significantly. You know, because in New York and in many other eastern coastal cities, you've had prices increase and rents increase significantly faster than incomes increase. I mean, multiples. Already in New York, the high end is already falling back up to 22% quarter over quarter in price. You know, that's considered an absolute crash and depression in many areas. To lose 20% of your real estate price. Wow.
Yeah, Reggie, no, I was going to ask you where the rubber would meet the road, but you touched on that. And that is when they start to unload these mortgage-backed securities. And you're saying that's going to push interest rates higher. Is there any other effect that selling those mortgage-backed securities would have on the real estate market? Or is it simply a function of interest rates?
Well, when you buy mortgage-backed securities, you increase the price of them by increasing demand. By increasing the price and liquidity, you're dropping the rates, the interest rates. And by selling them, you do the opposite. Now, normally it shouldn't be a problem if you sell it into a strong market. But if you sell it in a market where there's really not much natural organic demand for it, you're simply going to have interest rates increase because the prices are going to drop. Outside of the Fed, there is no entity buying significant or large amounts of mortgage-backed securities. Nobody really wants them. Only the Fed is buying them. Only the Fed can afford to buy them because the Fed, can print money at will. So here we have a conundrum of them saying that they want to reduce their balance sheet, but at the same time, they went through all this effort to coddle, bathe, and bail out the real estate markets and the banks that supported them. So, it's more of a damn if they do, damn if they don't situation.
Sure.
Now, they can get out of it, and they get out of it by having the economy grow organically. So when more economic activity comes about, more people are getting jobs are paying more, people have more disposable income, they're saving more than they're wasting money, they're spending, in retail, etc., then the economy goes up. But we don't see that. We actually see retail numbers looking relatively dismal in comparison to many expectations. We don't see earnings going up. We don't see income increasing much. You do see some increases, but realize that those increases were literally purchased by the Fed. And you have Donald Trump in office looking to do fiscal policy stimulus as well. And the Fed is apparently going to fight the fiscal policy stimulus with their monetary policy stimulus. So I think it's a big mess right now. It's not as bad as it was in 2007, but there are a lot of signs that are very similar, such as stock market valuation. Stocks are going up significantly, earnings are not going up. Financial stocks are going up 40%. Financial stock earnings have not, been close to that increase.
Reggie, so the logical next step, if we keep going down this direction, and the Fed doesn't loosen monetary policy, is for them to get into the stock market. Some believe that they are in the stock market already, covertly, but from an overt perspective, it would be interesting to see if they do, and if they would like to be involved in the stock market to continue to keep this going. And I'm curious because, we're talking about the Fed controlling interest rates. They do that from the Fed funds rate, and then they do it to another extent by buying and selling securities, bonds. So my question to you is, do you think that they will go into the stock market, and is that as big of a deal as them controlling the interest rates?
I don't think that they would admittedly go into the stock market. Stock market is extremely overvalued as it is. And there's a difference between trying to elevate stock prices and depress interest rates. You depress interest rates, that does stimulate the economy. And that does stimulate more of the economy than trying to increase stock prices. But as we've seen, when you depress interest rates, the end result is just a concentration in capital, because depressing interest rates causes risky assets to increase in price. Those risky assets are owned primarily by the capital class. The capital class is what I define as those who own financial and capital assets, real estate, stocks, bonds, private equity, etc. You get a lot less bang for your buck buying stock, and you have all types of additional issues. The same issues, the similar issues that you have by employing a negative interest rate policy. First of all, how do you get out of it? If the Fed bought stock, okay, when they start selling those stocks, the market typically collapses. And you can see that going in before you even start buying stock. You don't have to be an absolute genius to figure that out. You'll see that with the mortgage-backed security dilemma as well. And you'll see Europe is going to have that same problem as they try and unwind their, once you entertain paying people to lend you money, paying people to borrow money from you, it is very, very difficult to wean them into natural economic.
Well, Reggie, I want to transition over to a trend that I think lends itself to a lot of this global economic mess. And we're seeing this shift into safe haven assets. Many don't see Bitcoin as a safe haven asset. They haven't wrapped their minds around it enough to come around to it or believe in it. Hey, it's still, the story's still yet to be told. What's going to happen with it? Obviously, there's a lot of controversy within the digital currency space, which actually, for those who have been pundits of it, if we do see a massive blow up, when it's all said and done, it's not like you're left with a gold or silver that can be used in the market, right? But to that extent, that's obviously the extreme example. If we see an absolute blow up in digital currencies here, which I don't see happening, but I want to get your initial thoughts on it, and what are your thoughts on Bitcoin and the trend?
Well, I'm bullish on Bitcoin, the concept. I'm bullish on the implementation thus far, but it has its growing pains like everything else. Currently, its major downside is governance. You know, it has a relatively decentralized governance model. You have two camps competing to control what should be a relatively routine upgrade that's technically already figured out multiple times over. But one camp benefits if you do X, the other camp benefits if you do Y, and these camps are competing and preventing the upgrade to go forward. Now, I think it's gotten more media attention, more negative media attention than it deserves, but it is an impediment that is economically and technically unnecessary, but social politically, you know, it's got to be done. As for other similar technologies such as Ethereum, it is growing much more aggressively than Bitcoin, okay, and faster, but doesn't enjoy nearly as much economic network effect as a Bitcoin network, because the Bitcoin network is much more widely accepted and adopted. I'm also bullish on Ethereum as well, but Ethereum again has, you know, governance issues or decisions, and because it's more concentrated in its governance issues, it can move faster and more decisively than Bitcoin, but it's not necessarily to be said that those moves were the correct moves. But it seems to have bounced back from its issues at the back of last year, and it's moving forward quickly. The model and the technology that Ethereum and Bitcoin enable are spawning a new ecosystem of new technologies. I don't want to call them new coins, but new platforms that are being spawned on top of these technology, of these larger, more macro platforms. And you have a lot of intellectual capital meeting financial capital. And, you know, basically the result is the spawn of two positive things. Now, these startups, just like most other startups, will probably fail with 85 to 92% failure rate. But those that succeed, I think, are going to represent the new economy, the new sharing economy, the new tokenization economy, the ability to do X, Y, Z. I see the crypto economy in general to be the same as the internet economy in 1994. Most people did not understand the potential of the internet in 1994. Most of them even barely heard of it, didn't even know how to use it. You how far back as 1994, fast forward 23 years, and anybody who is under 23 years old doesn't know life without the internet.
Right.
Couldn't imagine life without the internet. And every single device or physical object they touch or come in contact with, in most areas, developed and undeveloped, it has some type of influence from the internet. That's a monumental change in just 20-something years, literally. If you go back before the internet, there's been no technological paradigm that has been as quickly moving, fast moving, and as wide sweeping as the internet paradigm. Even as far back as electricity, the invention of fire, the telephone, the railroad, the automobile, etc. Now, the blockchain will move even faster than the internet. You know, think of this as Internet 2.0. And now it'll move faster than internet. But I think that the technological value add from it will be even greater than the internet. So, you know, there's going to be a lot of failures. That's what happens in business. Okay, but those that get it right are going to get it right big. And of course, in a way, I'm talking my own book, because today we're launching our own offering, our own token. And that token represents the ability we're selling software, okay, and intelligent software that allows you to use smart contracts to disintermediate entities or industries that normally charge you money to transact with other people. So basically, we're making everybody their own independent company, banker, insurer, broker, exchange, private information exchanger, etc. It's phenomenal stuff, okay, phenomenal. And if this works, it really redefines what it's like to trade value, to trade money, to exchange money, to do business with others. You pay 90% less. It's safer, it's faster, it's more transparent, more auditable, etc. This, compared to just 10 years ago, would have been thought to be impossible.
Wow.
Okay, just like with the internet, from 20 years before then, you thought it would be impossible for a teenage blogger or vlogger to sit in a room and reach tens of millions of people and make $4 or $5 million a year and be quoted or even have more exposure than the largest media companies in the world. That is the fact right now, because a lot of vloggers, if you go to YouTube and look at technology vlogger like MK, PhD, the guy just graduated from college last year, and he has a larger following than Samsung, than Sony, and then Disney. Absolutely incredible. 21, 22 years old. So that is, the new world that we're entering into.
Yeah, rapid change. You don't want to be the guy on the horse and buggy surrounded by a bunch of cars, 100 years ago in this environment.
You definitely do not.
Well,
now, be aware that the guys in the horse and buggy cannot get off the horse and buggy. It's human nature. When you've made a lot of money doing something, by default, you want to continue doing something and making a lot of money, despite the fact that there's a very clear path that horse is dying and that buggy is breaking down. But it's very difficult to obsolescence yourself. Somebody has to cut your margins because you can't cut your own profit margin. By cutting your own profit margins, you move into a new area, but that's like voluntarily sawing off your left foot.
Yeah,
very difficult to do.
Yeah, that is very difficult. All right, so obviously you're a big believer, Reggie, in where this is going. I would like you to touch on the concept of sound money then. Is digital currencies, in your opinion, based on this governance problem, the issue with why it changes and it is not time tested and it evolves, is that a problem for people? And I'll give you a visualization here. If I was to bury my gold and silver in the ground and leave it for 1,000 years for whatever my descendants, we'll call them, I would feel confident doing that, but I'm not sure if I would, bury my hard drive here with my Bitcoins or digital currencies, if I would have that same sort of confidence. What is your level of confidence with these individual digital currencies?
Well, this is a brand new bleeding edge technology, so they haven't been proven by the test of time. But you also have to understand that the test of time shows that the only thing that remains constant is change. So burying your gold may not give you the result that you think it would 1,000 years in the future, as you found that gold has become obsolete. Or gold may return back to being, the medium of exchange of choice. I would doubt so, but you don't know. So predicting the future is very difficult and very risky. The best thing you do is take a look at the present, correlate it to the past, and make a good guesstimation of what's happening in the future. Most people doubt Bitcoin's value and relevancy primarily because they don't understand it. If you want to save Bitcoin, you don't necessarily have to bury your hard drive. You can literally bury a piece of paper or a flash drive or a memory stick, or a variety of other vehicles or machines or devices. Because what Bitcoin is an account of value stored on a global distributed, decentralized consensus database. Okay, and you simply need a hashtag and hopefully a password. Not hashtag, I'm sorry. You need a private key, a public key, and hopefully if you encrypted it, a password to get into it. Okay, and that could be stored almost anywhere and on anything, including written down on a piece of paper. So that is very powerful because you could take that one sheet and you could access the equivalent of several tons of gold. Okay, several tons of gold you cannot bury in your backyard. By the time you start trying to bury it, you probably drop dead by the time you get it on the ground anyway.
Good point.
So the portability, of Bitcoin as a value medium exchange, the value transfer is extremely, extremely valuable. Okay, and you can program this so you can make that value conditional condition upon a variety of other things that you can transform that value. So suppose you really are bullish on gold, you can take your Bitcoin and enter it to a smart contract and make it fluctuate with the price of gold, a gold index, gold bullion, etc. And then you could bury it, and now you still have your gold, of course, it's denominated in Bitcoin, or silver, or electricity, oil, IBM stock, euros, whatever you wish. That's the flexibility that Bitcoin represents.
All right, so Reggie, let's get your thoughts here on blockchain technology. Beyond digital currencies, do you see blockchain technology fulfilling a role in our future economy?
Well, I think the term blockchain is, it's been picked up by the media and overused. Blockchain technology is a very interesting invention, that was popularized, or at least came out, to my knowledge, in 2009 by the Satoshi Nakamoto persona. But blockchain technology in and of itself is just one piece of the puzzle. I'm bullish on smart contracts that are written on top of blockchain. Smart contracts are computer code that basically encapsulate a social or legal agreement or contract. And they're self-executing, self-enforcing, and usually immutable, unbreachable, or unbreakable, because the value is stored up front in the blockchain, and the blockchain itself, as well as the blockchain, is unbreachable or immutable. Then you have a guaranteed agreement between two parties, that will go as these parties have agreed. This is amazing because this eliminates all third-party intermediaries, escrow agents, regular agents, brokers, potentially exchanges, even principals. The largest industry in the world, particularly in the U.S., is the finance industry. And it's an industry that also has some of the largest margins. It's the largest because everybody wants to transact value, financial value, and they believe they need these third parties. If you eliminate the need for these third parties, these $10 million bonuses that bankers get, multi-million dollar bonuses that traders get, and average median income across the bank of $400,000 and change for someone like Goldman Sachs, over 22,000 employees, is now returned to the participants of the transaction versus the intermediary or the rent seeker in between the participants of the transaction, which would be the bank. So you release these tens of billions of dollars every quarter, in compensation costs per entity, and bring them back to the party the transaction parties, and you have a much cheaper transaction, a much cleaner transaction, much more transparent and faster transaction, and much safer, believe it or not, if it goes through the blockchain. Again, this is the premise behind the Veritaseum, which is our company. Behind the Veritaseum token offering is to basically allow everybody to transact directly and not have to rely on these third parties. So mix smart contracts with the blockchain, and you have peer-to-peer capital markets, the ability for everybody to transact value directly without going through the big central bank or the central bank with the money center banks around it, which would be Goldman, JP Morgan, Citibank, etc., or regional banks or national banks. This is phenomenal. Now that 12-year-old genius in Sri Lanka, which happens to be a little girl on a rice farm that knows rice prices locally and potentially throughout her area of the country, better than everybody, to compete with the commodity trader sitting at the JP Morgan desk. And she could compete head-to-head, even with a small amount of capital, maybe 45 cents a day. But all those 12-year-old geniuses throughout the areas that have been traditionally ostracized from a socioeconomic perspective, rural India, Haiti, Eastern Europe, etc., that talent can now come to the forefront because they can now participate fully in the capital markets, because now capital markets are peer-to-peer versus highly centralized going through gatekeepers. Again, long-winded diatribe, but I feel strongly about this because I feel this releases value and brings the entire world into, capitalism 2.0, the real deal.
Sure. Well, the trend is undeniable, and we're seeing Bitcoin approach $1,300 once again. So, I mean, if we could just look at the price, people are waking up, and the mainstream media has woken up to Bitcoin in many ways, and digital currencies, and the trend that we're headed here. So, Reggie, I just want to give you a moment or so here to share some final thoughts, some closing words, maybe a couple words of advice for the audience, and if people want to learn more about what you're doing, where they would go and what they would find.
Okay, well, a lot of people ask me for advice, analytical advice and research, and I tell everybody the first thing that you need to learn is to learn. So always read, use primary sources. If there's something that you don't understand, keep going until you understand it. A lot of sales entities, salespeople, purposely obfuscate relatively simple concepts to make it seem like you need their expertise to understand it. A lot of astute investors will not invest in anything they don't understand, primarily because they don't understand it. And they tell the salesperson, if you cannot explain it to me in a way that I can understand it, that means you probably don't understand it well enough yourself, okay? Or you're trying to pull one over on me. So in going over the token sales of a lot of the new companies, I see that's happening often. And this is a very small niche now, but I think this will grow over time. Regulators, permitting, of course. And those people who look at these token sales, I tell them, look at it as a regular business, okay, like you would everything else. Even if you're not into cryptographic assets and, blockchains, et cetera, we look at regular investment, such as stock. Always look at it from a practical perspective. So if 1 + 1 doesn't equal 2, chances are it simply doesn't. It's not as if you're missing something. My analyst and I went over the Italian banking sector last year. We started reading the annual reports, and it read like an absolute horror story, literally, like The Exorcist Part 5. We looked at each other and said, nobody could have possibly read these. You don't need any special expertise. All you have to do is use Google Translate from Italian to English, and you see these were absolutely horrible. But it appears that despite the fact there were 15 analysts following these banks, and these analysts were paid lots of money with large staffs, nobody read the balance sheet, and nobody read the financial warning. So 1 quarter later, guess what happened to Italian banks? They dropped 20%, 25% in price. They asked for bailouts. The Italian government has to bail out, asking the IMF and the EEC for permission, etc., as if it was a big surprise. All you have to do is read the fine print.
All right, sir.
And of course, one last thing. I invite everybody to come check out our token offering at Veritaseum.com. And, of course, consider participating in the burgeoning of the peer-to-peer capital markets, which we believe you're supplying the keys to.
All right, sir. Well, hey, thanks for coming on the show with me. I appreciate your time. I appreciate your expertise. Thanks so much.
Okay. You're very welcome.